I'm Connor McKenna, and welcome to the latest edition of LUMA's Market Report, where every quarter we get you up to speed on the latest M&A and capital markets trends in digital media and marketing. For today's report, we'll be covering the full year 2020. You can download the report by clicking the link in the bio or by going to lumapartners.com. And as always, don't forget to subscribe. So before we dive in, just a little bit of housekeeping here. You know, like many looking to shake off 2020 and start the year anew, we decided it was high time that we refreshed our market report. You'll see in the downloadable report just how much is in there. And a lot of this is because 2020 is a full year look back. It also was a very interesting year that had a lot of stories to unpack. The quarterly interim reports will continue to be a bit more concise, but you can always rely on them for a thorough list of deals activity as well as any key market insights. As for these videos, rather than doing a flip through of the deck, which is really pretty repetitive, we decided to change this up a bit too, and instead keep a shorter recap of the key market insights for those who don't have time to flip through a 50-page deck. As always, we hope you enjoy and welcome all feedback. Let's begin. Probably the most overused word of 2020 has been unprecedented. Well, that or you're on mute. But it's really hard to describe 2020 in a better way than unprecedented. It's been a crazy ride with tons of ups and downs that have really impacted all aspects of our lives, whether that's our health, our work, our family, politics, or even financial markets. And while the uncertainty and volatility is far from over, there have been lots of glimmers of hope. And one such area is the media and marketing technology sectors. Now, if you look at M&A on an annual basis, it's anything but a pretty picture. Ad tech, MarTech, digital content were all down and many at their 5-year lows, with really only direct-to-consumer activity being up. But it's when you dive into the quarters that our optimism really starts to show through. As you can see, when the pandemic hit in late February, nearly all M&A went on halt. Q1 and Q2 were drastically down in terms of deal volume. But then towards the end of Q3, really in September, and then into Q4, we saw M&A activity come back on in spades. And Q4 was really an incredible quarter, even expanding beyond the Q4 of 2019. More importantly, Q4 also saw the return to many scaled transactions. There were 28 deals over $100 million in Q4, and impressively, 12 deals over $1 billion throughout the quarter. This represented actually 70% of all deals over $1 billion throughout the entire course of the year. So clearly a return to buyer confidence. So what drove this new buyer confidence? It's not as if it feels like we're out of the woods yet. We're still in the middle of the pandemic. There's a tumultuous political situation and everyone is working from home. We'd really chalk it up to a few key factors. The first, very simply put, is just time. Humans have this incredible ability to accept their circumstances and pretty quickly begin to normalize them with the ability to then move forward. And at the outset of this pandemic, we were all feeling pretty scared, and that includes people working at companies and who are making decisions about M&A. People often underestimate how important psychology is when it comes to M&A deals, but truly no deals get done when people are feeling uneasy. And the first thing to do before getting excited about the future is to make sure that your base is set. And so in those early days of the pandemic, everyone was focused on making sure their employees were happy and that their customers were going to continue to work and buy with them. As that went through, that's when we saw the return to M&A. We estimate that this was about a 100-day pause in M&A conversations from about mid-March until the end of June. Then at the start of Q3 and July 1, it was like a starting gun went off and everyone picked their heads back up, realized that they got to get some stuff done in the year 2020 and they only have 2 quarters left. All of a sudden, conversations started picking up all around us, which then led to negotiations and then finally deal announcements. The other key factor were some, and this one's very particular to digital, were some big shifts in consumer habits. Primarily, these were accelerating shifts around streaming, gaming, and e-commerce. In streaming, it was both CTV and audio, and in all these areas, we saw existing consumers start to use these more and more, and even more importantly, massive shifts of consumers that were not previously using these forms of technology starting to use them. The important thing with each of these is that once you start to get these habits and you realize how easy it is to buy something online and have it show up at your house, it's a very hard habit to break. And for that reason, there's a ton of optimism about the future of these ecosystems. Additionally, for many of the ones that are advertising supported, specifically CTV and audio, the number of users now going through these streaming channels means there's a huge opportunity from the advertising perspective, not just the subscription perspective that has taken a lot of the attention the last few years. And then finally, there's been a very strong public markets, buoyed by some aggressive actions by the Fed and the federal government. The public markets recovered very quickly from their pandemic lows in late March. And they've actually stayed consistently strong throughout the year. Again, this just adds to the confidence of companies and also gives them new currency to buy, making it much easier to approach the M&A markets. If you add to these newfound confidence from the pandemic, as well as some underlying trends that have been going on for the last few years, this really brings us to LUMA's 5 key M&A themes. And these are CTV, audio, the mobile app ecosystem, data and identity, and endgame programmatic consolidation. Each of these sectors saw a number of deals throughout 2020, again, mostly in the latter half of the year and accelerating in the last quarter. But the number of transactions and scale of transaction has been impressive, and we expect these to continue for each of them. For CTV, audio, and mobile app ecosystem, a lot of this is tied to the ongoing consumer habits shifting towards these streaming forms, as well as expectations that advertising dollars will continue to shift to these channels. For data and identity, this is really a function of the change that's happening in the ecosystem. And as always, change breeds opportunity. This ecosystem has been dealing with various regulations from GDPR to CCPA for a number of years, and more recently, some big changes from the large tech players, such as Google announcing plans to get rid of their cookies, as well as Apple's announcements about making the IDFA an opt-in for their iOS 14. While these are certainly challenges in the near term, these types of challenges often create massive opportunity. Additionally, for data and identity, as e-commerce and more people use digital channels continue to grow, there's opportunity for more personalization, analytics, and attribution across the board, as more and more marketers are going to want to get their hands on these types of technologies. And finally, endgame programmatic consolidation. This is something we've been calling for a number of years, probably 6 years or so, but in the last few has really started to take form. During the pandemic, this is really the time to weed out the strong from the bad. And we're seeing more of the better companies start to get acquired, and really the larger companies pull away from the pack. The 2020 public markets. It's hard to describe these in any other way than remarkable. In the face of a pandemic, staggering unemployment, challenging economic realities, the public markets shot back after their lows during the early days of the pandemic, buoyed by both aggressive actions by the Fed, as well as an onslaught of retail investors coming into the market. The market was strong not just for companies that were already public and known names, but also for companies looking to access the public markets throughout this year. 2020 actually saw one of the largest IPO markets in recent memory. There was $172 billion of capital raised, far above the amount raised for any number of the prior 10 years. This included both brand name companies such as Airbnb, which went to market in December and has already grown 100% from its offering price, as well as some B2B technology companies like Snowflake or Unity, which also went to market in the latter half of this year and also are up over 100% from their original offering prices. In addition to IPOs, we've seen a number of companies, especially tech companies, try to access the markets via alternative methods to the traditional IPO path. This includes both direct listings, which have gained attention over the last few years, as well as SPACs. And SPACs were the true darling of 2020. So SPACs are effectively blank check companies whereby sponsor groups look to raise capital in the public markets with the intention of going to find a target to merge with, often accompanied by private investment at the time of the merger. This year, we saw about 250 SPACs come to market, raising $83 billion in capital, and including pending deals, about $102 billion. This is a 650% increase from 2019 and way above anyone's expectations coming into this year. There have been so many SPACs that we actually decided to put together a SPAC LUMAscape to help list all these out. Our founder and CEO has a long tweet storm that dives into the various aspects of the SPAC LUMAscape as well as the nuances of the SPAC market. Click the link in the bio to find out more. In addition, this year, one of the new things we've done is we've put together our own TMT subsectors to look at the public markets based on the companies and subsectors that we care most about. These sectors include ad tech, MarTech, digital content split between gaming and X-gaming, digital giants, and marketing clouds, as well as traditional TV, telcos, traditional media, data and ratings, agencies, and tech services. And you'll notice that we've split these by what we're calling tech sectors and more traditional sectors. Now we'll continue to use these subsectors throughout our subsequent reports and track what's going on across these different company sets to figure out where there are unique trends and where there are differences between these different players and categories. In 2020, the big story and the big difference between what was going on here was the growing tech chasm between the technology-focused subsectors and the more traditional subsectors. On the technology subsectors, every single one saw significant growth throughout 2020, all outbeating the S&P 500 pretty significantly. If you look at the chart here, ad tech grew over 200%, MarTech 180%, digital content 100, almost 130%, and so on and so on. But then when you flip to the traditional side, it's a much different picture. While most sectors continued to grow throughout this year in the face of the pandemic, they did so at much more modest amounts. And in fact, the few that have done particularly well, such as tech services and traditional TV, are mostly driven by individual companies, S4 in the case of tech services and Disney in the case of traditional TV, while most of the other companies in those subsectors were actually challenged. And a few subsectors, telcos and agencies, actually declined overall on the year. What's interesting about this is it's not just the market cap differences, but the differences in multiples that showed up throughout this year. Throughout 2020, there were huge jumps in multiples, particularly revenue multiples, for the technology-focused companies. If you look at marketing tech, they went from averaging about 16 times LTM revenue to averaging 32 times LTM revenue this year. That is a tremendous jump and one that's very hard for traditional companies to compete with. Not only does it add more heft to these companies in the public markets and allow more investors to come to them, but it also gives them additional leverage in looking for acquisitions, as they have paper that is far more accretive than their traditional counterparts. Go download our report to get more details and in-depth analysis on the public markets and the growing tech chasm, as well as a thorough list of key financings throughout the year and more. In sum, 2020 has been a crazy year, but we're more optimistic about the future than we ever have been before. Change is a breeding ground for opportunity, and there's never been more positive change for the digital channel than there is now. We'll see you next quarter when we'll get you back up to speed in the latest trends in digital media and marketing. Until then, we hope you're as busy as we are. Thanks for watching.